Imagine waking up one morning, opening your brokerage account, and seeing a stock you bought for just a few dollars trading at $50, $100, or even higher. Most people would call that a fantasy. But what if I told you there are investors who believe NVTS, Navitas Semiconductor, has the potential to become one of the biggest semiconductor success stories of the next decade? Now, before you think this is just another hype stock, hear me out. Because this company is connected to some of the fastest growing industries in the world right now: artificial intelligence, data centers, electric vehicles, and next generation power technology. The real question is, can NVTS actually reach $50, $100, or even $200? Or are investors getting carried away? Let's break it down. First, let's talk about what Navitas Semiconductor actually does. Most people hear the word semiconductor and immediately think about NVIDIA. But Navitas is different. Instead of building AI graphics chips, Navitas focuses on power semiconductors. In simple terms, they make technology that helps electronic devices use electricity more efficiently. That may not sound exciting at first, but here's why it matters. As AI grows, data centers consume more power. As electric vehicles become more popular, efficiency becomes more important. As the world moves toward renewable energy, better power management becomes critical. And that's exactly where Navitas wants to play. The company specializes in gallium nitride, commonly known as GaN. Many experts believe GaN technology could eventually replace traditional silicon in many applications because it's faster, smaller, and more energy efficient. That's a huge opportunity. But opportunity alone doesn't make a stock go up. Execution matters. And that's where things get interesting. Right now, Navitas is still a relatively small company compared to semiconductor giants. That means investors are not paying the same level of attention they give companies like NVIDIA, AMD, or Broadcom. Sometimes that's a bad thing. But sometimes it's exactly where the biggest opportunities are found. Because when a small company starts succeeding, growth can happen very quickly. Now let's talk about the first major target. Can NVTS reach 50? Personally, I think this is the most realistic bullish scenario. Not tomorrow, not next month, but over the long term. If the company continues growing revenue, wins more partnerships, and benefits from increasing demand for AI infrastructure, a $50 share price isn't impossible at all. In fact, we've seen many technology stocks make similar moves once investors started recognizing their future potential. However, investors need patience. A lot of patience. The market rarely rewards companies overnight, and in just a moment we'll discuss whether $100 is realistic and the shocking reason why some investors are even talking about a $200 price target. So can NVTS reach 100? This is where things become much more challenging. For a stock to make that kind of move, everything needs to go right. The company would need strong revenue growth, better profitability, successful expansion into new markets, and most importantly, investors would need to believe that Navitas is becoming a major player in the semiconductor industry. Remember something very important. Stock prices are driven by future expectations, not just current results. If Wall Street starts viewing Navitas as a critical supplier for AI, data centers, and next-generation power systems, investor enthusiasm alone could push valuations much higher. That's exactly what happened with several successful growth stocks in the past. But there are no guarantees. The road to $100 would require years of consistent execution. Now let's address the number that gets everyone excited. The famous $200 target. Could it happen? Yes. Anything is possible in the stock market. But investors need to understand what would be required. For NVTS to reach 200, Navitas would likely need to become one of the dominant companies in power semiconductors globally. We're talking about massive market share growth, huge revenue expansion, strong profits, and widespread adoption of its technology. That's not impossible, but it's definitely the most aggressive scenario. This is why smart investors don't focus only on the best case outcome. They focus on probability. And right now, a $50 scenario appears much more realistic than a $200 scenario. But here's the twist most people aren't talking about. The biggest risk isn't competition. The biggest risk is time. Many investors buy growth stocks expecting quick gains. Then they get frustrated when nothing happens for 6 months or a year. And what happens next might determine whether NVTS becomes a huge winner or a disappointing investment. The truth is that some of the biggest stock market winners spent years moving sideways before eventually exploding higher. Patience separates successful investors from emotional investors, and that's especially true with a company like Navitas. Now, if you're asking for my personal opinion, here's what I think. I believe Navitas is an interesting high-risk, high-reward opportunity. The company operates in industries with enormous growth potential. The technology appears promising, and if management executes successfully, today's valuation could look very small years from now. Do I think $50 is possible? Yes. Do I think $100 is possible? Also yes, but much more difficult. Do I think $200 is possible? Only under an extremely bullish scenario where nearly everything goes right. That's why investors should remain excited but realistic. Because investing is about balancing opportunity with risk. Now I want to hear from you. What is your prediction for NVTS? Do you believe this stock can reach $50? Do you think $100 is achievable? Or do you believe the bulls are being too optimistic? Drop your prediction in the comments below. And if you enjoyed this analysis, make sure to like this video, subscribe to the channel, and turn on notifications. Because we're constantly looking for the next potential winner before the crowd finds it. Thanks for watching. And remember, sometimes the biggest opportunities are hiding in places where most investors aren't even looking.